Hey everyone, so I wanted to share 4 ETFs that have a nice long proven track record. So first let's start with QQQ. Now this one is a tech heavy, very tech heavy growth fund, meaning there's a lot of volatility but it's expected to grow the most because it's a growth fund. Now you'll see here that most of the holdings are the major tech companies: Nvidia, Apple, Microsoft, Broadcom, Amazon, Alphabet, and then you see Tesla, Meta, and Netflix, and there's hundreds of other ones as well. There's a lot of holdings. These are the top 10, and it makes up 53% of your portfolio. So look out if you're investing in these individually, and if you have other ETFs that are overlapping, try not to overlap. Again, that was QQQ. Next, let's look at a high dividend paying. This is going to be way less growth, but you get dividends usually like 3 times a year. It's mostly quarterly, but you'll have to look at the high dividend you're in. I'm in SCHD. So if you see here, the companies are going to be companies that will pay you dividends for holding their shares. A lot of the times you're not going to know these companies. I bet you know Coca-Cola and Pepsi and Chevron and Lockheed and Verizon, but some of these are less known. And this is 42% of the holdings. Again, there's many more companies, and you'll be getting dividends. So expect less growth, less money over the years, but you'll get dividend payments. Next, let's take a look at Vanguard's VOO. This is a total S&P 500 essentially. It tracks the best companies within the S&P, and you see here again there's overlap with QQQ. So if you have this one and QQQ, you're doing a lot of overlap. So again, that's what I was saying earlier. So you can either do QQQ or VOO because it's going to have a lot of overlap. And this is a growth fund as well, but it's more of a total stock. Then we see here VWO. This is emerging markets. The international emerging markets have been doing extremely well the past year. Let's see if it captures it. You see it was 25% last year, which was really good. That beats a lot of the ETFs. Here you're going to be getting things that are international. You're getting Taiwan semiconductors, which are needed heavily for AI and for the new technology. And then you see here these other companies are all international. It looks like Hong Kong and China, and these are all the emerging markets. So expect to have a lot of volatility here, but these should be doing well within the coming years, just given the change in infrastructure and the change in international relations. So that's it. Those are the 4 ETFs I wanted to share with you all. Thank you.